Imagine fixing the errors in our genetic code, those tiny typos that cause devastating diseases with just a single treatment, no major surgery, just a precise sort of search and replace for DNA. It sounds like the future, right? And it's the promise of gene editing. Today, we're taking a deep dive into Prime Medicine, ticker PRME, a company, well, working to make that future real.
Welcome back to the deep dive. So we've dug into your stack of sources, company reports, analyst notes, recent news, SEC filings from early June 2025, basically to pull out the most important stuff you need to understand this company right now.
Yeah, and you can find links to all those sources down in the description.
Right.
Our mission today is pretty simple. Guide you quickly, thoroughly, through the key info on Prime Medicine. We're talking their tech, the business challenges, financials, those big management changes, and, what the market thinks of it all. Think of this as your shortcut to getting up to speed.
Yeah, we'll hit their core business, look at the recent management shuffle and strategy shifts, crunch the numbers, get a feel for market sentiment, see who's holding the stock, and then wrap up with the risks and opportunities.
And hey, as we get started, if you're finding these deep dives useful, remember you can get more analysis like this, even request your own deep dives over at the Stock Analytics AI YouTube channel. Just hit subscribe there.
And for members, the Euro 4.99 a month level, your requests get prioritized, whether it's an analysis like this or digging into earnings calls.
Definitely check it out. Okay, so we'll also end with a core question, something to chew on that kind of captures the high stakes here.
Sounds good.
All right, let's build the foundation. What exactly is Prime Medicine and this prime editing tech that's, central to their whole story?
Okay, so Prime Medicine, at its core, it's a biotech aiming for one-time cures for genetic diseases. And their cornerstone, their big thing, is this proprietary tech they call prime editing.
Okay, give me the quick pitch on prime editing. How is it different from, say, older gene editing methods we might have heard about?
Right, so think of DNA like this huge instruction manual. Older methods, maybe like CRISPR, are often described like using scissors to cut out a page with an error. It works, but it can sometimes be a bit messy, introduce other issues.
Okay.
Prime editing, well, it's designed to be more like a really sophisticated word processor's surf and replace. It finds a specific spot in the DNA code and then directly writes in the correct genetic sequence. And crucially, it aims to do this without making a double-strand break.
A double-strand break, that's cutting both sides of the DNA ladder, right?
Exactly. And avoiding that is a big deal. The sources really emphasize this. The goal is more precise edits, fewer unwanted changes, what they call off-target effects compared to some other methods.
So the big claim is precision and maybe better safety because they avoid those full DNA cuts.
That's the idea.
Yeah.
And they claim this tech could theoretically correct something like 90% of known disease-causing mutations.
Right.
Which just huge potential.
Yeah.
Right.
90%. Wow. That's massive potential. But okay, reality check. Are they actually selling any therapies yet? Making money from products?
Nope, not at all. As of early June 2025, Prime Medicine is what you call clinical stage. 0 product sales. The little bit of revenue they do report, like $1.45 million in Q1 25, maybe $3 million for all of 2024, that comes entirely from collaboration deals.
Ah, like that deal with Bristol-Myers Squibb you mentioned.
Yeah.
For the CRT stuff.
Right. Exactly that one. Yeah, that collaboration revenue, it's important validation for their tech platform, sure. But the small amount, it just really underscores how early stage they are. They're completely reliant on outside funding investments, potential future milestone payments from partners, and obviously the hope that their pipeline drugs eventually succeed years down the road.
Okay, speaking of the pipeline, this is where things got really interesting and maybe a bit messy recently. There was that big restructuring announced back in May 2025. What programs are they actually focusing on now?
Yeah, that May restructuring was a huge pivot. They seriously reshuffled their pipeline priorities. The internal focus now is mainly on in vivo programs. These are therapies delivered straight into the body, targeting the liver, and using lipid nanoparticles, or LNPs, as the delivery vehicle.
Okay, quick refresher. In vivo means editing inside the body. Ex vivo is taking cells out, editing, putting them back. And LNPs. Those are like tiny fat bubbles carrying the editing gear.
You got it. Exactly. So the two main internal programs getting the resources now are PM577 for Wilson's disease and their program for alpha-1 antitrypsin deficiency, AATD. Both target the liver, both use LNPs.
And timelines. When might we see human data?
They're aiming for the regulatory filings, the INDs or CTAs, needed to start human trials in the first half and middle of 2026, respectively. But initial clinical data, probably not until sometime in 2027. So, yeah, still a ways off.
Okay, quite a wait for data on those key programs. What else is still in the prioritized pipeline?
Well, there's an in vivo cystic fibrosis program they're working on with the Cystic Fibrosis Foundation. That might use LMPs or maybe AAVs, another delivery method using viruses. And then there's that CORE-T program partnered with Bristol Myers Squibb.
Right. Now let's talk about the program that actually did produce human data and got a lot of attention. PM359 for CGD, chronic granulomatous disease. I remember reading they had breakthrough initial results in May.
Yeah, this is maybe the clearest example of the tight spot Prime Medicine is in. In May 2025, they announced positive initial data for PM359. This was an ex vivo program, remember, editing cells outside the body. The data showed it restored function in the key immune cells. They called it breakthrough validation. Proof the platform works in humans.
That sounds fantastic, like exactly what you'd want to hear.
Scientifically, yes, it's huge validation, proof of concept in a person. But, and this is the kicker, in the very same announcement, they said they were deprioritizing internal development of PM359.
Wait, what?
Yeah. They're now actively looking for external partners or maybe licensing it out. They even stopped work on a related CGD program.
So they got breakthrough data, but basically said, we can't afford to develop this ourselves, maybe someone else wants it.
That's pretty much the takeaway from the sources in the strategy shift. The decision was to focus their limited internal resources, their cash, on those in vivo liver programs, Wilson's and AATD.
Why those specifically?
Well, they potentially target larger patient populations. And the in vivo LNP delivery might be more scalable, maybe less complex, than an individualized ex vivo therapy like PM359. It looks like a really tough choice, driven hard by financial constraints. They're placing their bets on assets they think have a better shot given their budget, even if it means farming out a program that just hit a scientific home run.
And those liver disease markets are potentially bigger, right?
Yeah. The sources mentioned potential market sizes like $1.2 to $2 billion for Wilson's, maybe $2 to $3 billion for ATD. So likely a factor in prioritizing limited capital.
Wow. That really drives home the brutal economics of biotech. Amazing science isn't always enough if the money isn't there. So where does Prime Medicine stand in the market overall? What's their size, their scale?
They're still pretty young, clinically speaking. IPO'd back in October 2022. No products on the market, so no real market share in the traditional sense. Before that May restructuring, they had just over 200 employees, around 214. But then they cut about 25% of the workforce as part of those changes.
And their market value, their market cap, I saw numbers bouncing around like $160 million, maybe up to $220 million in early June.
Yeah, that's the range reported in the sources we looked at. Around $220 million in some, others closer to $167, $169 million. Either way you slice it, it's, well, pretty modest for a company with truly novel tech and actual human proof of concept data, even if it's early.
Why so low then, if the tech has that 90% potential you mentioned?
It just screams market skepticism, right? Investors seem heavily focused on the risks, specifically the cash burn, how fast they're spending money, and the runway, how long until they need more money. Plus, there's uncertainty about this new strategy, the new leadership, the long timelines for data, and just the general high failure rate in biotech clinical trials.
So even with cool science?
Even with cool science, the path to actually getting a drug approved and sold is incredibly long, expensive, and risky. The market right now seems to be pricing in those hurdles pretty heavily. You see other early-stage biotechs, sometimes with arguably less broad tech, commanding much higher valuations.
Okay, so potential is huge, challenges are clear. What makes this prime editing tech hard for others to just copy? What's the competitive advantage?
Well, the main thing is the proprietary nature of prime editing itself. The intellectual property, the patents, co-invented by a really big name in the field, Dr. David Liu. It's that specific search and replace idea, aiming for precision without the double-strand breaks and the claimed versatility across so many mutations. But it's not just the IP, it's the know-how, right? The specialized expertise needed to actually make it work reliably, plus the sheer cost of R&D, clinical trials. We're talking hundreds of millions, maybe billions. Then add the long, risky development timeline and navigating complex regulations. All those things create pretty high barriers for anyone trying to replicate it.
And the gene editing field overall, is it crowded, growing?
Oh yeah, it's incredibly dynamic and growing fast. Sources are forecasting big numbers, like the overall market hitting maybe $9.5 billion by 2032, or the CRISPR part alone potentially reaching $16.5 billion by 2034. It's driven by better understanding of genetics, these tech advancements like prime editing, new applications, and regulators trying to support therapies for tough diseases.
Who are the main competitors Prime needs to worry about?
It's a crowded space. You've got big pharma players dabbling, dedicated biotechs using different methods like traditional CRISPR or base editing companies like Editas, CRISPR Therapeutics, Intellia come to mind. And then there are direct competitors working on the exact same diseases Prime is targeting, like Coral Bio is already in phase 12 for ATD, one of Prime's focus areas.
So it's a race on multiple fronts: tech, speed, execution.
Absolutely. They need to move their programs forward and convince everyone that Prime editing is truly better, safer, or more effective than the alternatives, all while competing for resources, patients, and eventually market share.
Okay, let's shift gears to the people running the show, especially with those recent changes. Is this the right team to steer Prime Medicine through these choppy waters?
Well, that leadership transition in May 2025 looks like a direct consequence of the restructuring. It was about addressing the financial crunch and refocusing. The new CEO, Alan Rain, was the CFO before, so he knows the finances inside out, has a background in biotech finance, investing.
And the new executive chair, Jeff Marazzo. That name rings a bell.
Yeah, he's a big deal in gene therapy. Founder and former CEO of Spark Therapeutics. They got Luxturna approved, one of the very first gene therapies, and then got acquired by Roche for almost $5 billion.
Wow. Okay, so bringing him in as executive chair adds some serious operational and commercial street cred.
It really does. It feels like a very deliberate move to bring in leadership focused on financial discipline, efficient R&D, and knowing how to navigate that really tough path to commercialization, what people call the valley of death for biotechs. The company even called it thoughtful succession planning.
And the previous CEO, Keith Gottesdiener, he oversaw getting that first human data.
He did. Led them from 2020, took Prime editing from a concept into the clinic. The official line is his departure wasn't due to a disagreement, and he's consulting for a bit. But, his exit happened right alongside the big restructuring, the layoffs, the pipeline pivot, which often happens when companies make these kinds of major strategic shifts.
That restructuring, it involves some tough calls, right? The 25% job cuts, basically shelving that CGD program internally, despite the good data. How did they handle that crisis?
Look, it was a comprehensive and probably painful response to their financial situation. The layoffs, the dramatic pipeline refocus, deciding to seek partners for PM359, even with positive data. It shows they're willing to make hard choices to cut costs drastically and try to extend their cash runway into maybe the first half of 2026. It's pragmatic, maybe, trying to survive and focus on assets they think are more viable long-term, even if it means letting go of something promising internally.
That PM359 decision just keeps coming up, really highlights that science needs funding tension.
It really does. They hit a major scientific milestone,
Yeah.
validated the tech in humans, but apparently didn't have the resources internally to take it all the way through late-stage development within their current budget.
How are they on communication? Transparent.
They use the standard channels, press releases, SEC filings, the 10Ks, 10Qs. They gave a reason for the former CEO leaving. But the timing of bundling that positive PM359 data with all the bad news, restructuring, layoffs, CEO change back in May, well, you saw how the market reacted. The financial distress signals clearly drowned out the scientific win for investors. Clear communication from the new team about the path forward is going to be super important.
Okay, so stepping back, management overall, are they honest, capable, looking out for shareholders?
Honest. Seems so, based on standard disclosures. Capable. Well, the science team definitely delivered with that PM359 data, so technical capability is there. The new leadership brings crucial financial and commercial experience for this next phase. Making the tough restructuring calls shows a degree of pragmatism, maybe capability in adapting, shareholder-oriented. Well, the restructuring is aimed at survival and focusing on potentially higher value programs long-term, and those recent stock purchases by the new CEO and others after the bad news. That's a pretty strong signal they believe in the revised plan and are aligning with shareholders now, even if the stock price tells you the market isn't buying it just yet.
All right, let's dive deeper into the numbers. What's the financial health actually look like on paper?
Yeah, it reflects their stage, right? Not profitable, burning cash, market cap bouncing around that, say, $160 to $220 million zone in early June 25. PE ratio, meaningless. They just lose money consistently. About netting $1.40 per share loss in Q1 25. Negative $1.58 over the last year.
And that tiny revenue stream we talked about.
It's exactly, just from collaborations. Nowhere near enough to cover the massive R&D spend. They spent over $40 million on R&D in Q1 25 alone, and over $155 million for the full year 2024. So yeah, profit margins are deep in the red, big losses.
What about the balance sheet? Are they loaded up with debt?
Okay, this is a key worry spot highlighted in the sources. Their debt-to-equity ratio jumped a lot. It went from like 0.94 at the end of 2024 to 2.07 by the end of March 2025.
Whoa. What does that mean practically for a biotech like this? Over 2.0 debt to equity.
I mean, significantly more financial risk. They have way more liabilities, fixed obligations compared to the cushion of shareholder equity. Now, it's not all traditional bank debt. A chunk is likely operating leases for facilities they expanded into. But still, it increases leverage, reduces their flexibility, and puts more pressure on their cash flow, especially since they're still burning cash. And speaking of cash burn, it's serious. They went through nearly $49 million just from operations in Q1 2025. The estimates suggest their cash runway, even after the cost cuts, only lasts the first half of 2026.
H1 2026. That's not very far away.
No, it's not. And importantly, their 2024 annual report, the 10K, included what's called going concern language. It's a standard accounting flag, but it explicitly highlights their dependence on raising more money to keep operating beyond that runway.
So summing up the financials, consistent losses, heavy cash burn, short runway, and a balance sheet that's looking weaker with more liabilities.
That's the picture the numbers paint, yeah.
Yeah.
They absolutely need to raise more capital down the line or land some big partnership money that doesn't involve selling more stock.
Okay, let's shift focus again. We've covered the company, the leaders, the money situation. What is the market actually saying? What's the vibe, the sentiment around Prime Medicine right now?
Overwhelmingly negative. Skeptical. You just have to look at the stock price. Trading down in the, $1 to $1.70 range in early June. That's a massive drop from its 52-week high over $8. Like down almost 80% year over year.
And that May 19th announcement, the one with the good data and the bad restructuring news, how did the market react that day?
Dropped like a rock. Nearly 20%. That tells you everything about market priorities right now. The financial distress signals, the strategic chaos, the uncertainty around PM359's future. It just completely swamped the positive science news. You saw commentary using phrases like skepticism looms, calling it a tangled mess.
So a huge disconnect between the scientific potential they talk about and how the market sees it?
Massive disconnect. The company's talking breakthrough data, tremendous promise. The market's laser focused on the practical problems. How long until the cash runs out can they execute this new plan? How long until any product gets approved, if ever? Plus the competition, the general risk.
How are the Wall Street analysts weighing in?
Sentiment there has soured quite a bit too, especially after May. Average price targets got slashed from over $13 down to $7.50 between early May and early June. You had firms like Citigroup, H.C. Wainwright, J.P. Morgan downgrading to neutral.
What reasons did they give for the downgrades?
Pretty much what we've been discussing. The shifts in priorities, the leadership change, the delays or uncertainty around that CGD program's path forward. Citigroup put a $1.50 target on it, basically saying they saw very little near-term upside. While some analysts are still holding buy ratings, the overall trend is definitely one of reduced confidence.
What about short sellers, people betting against the stock?
Oh yeah. Short interest is very high. Around 17.7 million shares shorted, which is almost 30% of the shares actually available to trade, the float. That's a big number.
And what does that high short interest signal?
It's a strong sign of bearish sentiment. It means a lot of investors are actively betting the price will fall further, reflecting those deep worries about finances and execution. It does technically create potential for a short squeeze if surprise good news hit, but the main message right now is doubt. Significant doubt.
Okay, so a company facing big hurdles, viewed skeptically by the market. Who actually owns Prime Medicine? Who are the shareholders?
Well, institutions like mutual funds, hedge funds, big investment firms own a pretty significant chunk, somewhere between, say, 45% and maybe close to 60% of the shares, depending on the source. But interestingly, the data for Q1 2025 showed a decrease in both the number of institutions holding shares and the total amount they held. That kind of fits with the stock price falling and confidence maybe waning around that time.
Any big names among the institutional holders?
Yeah, a few key ones. Alphabet, through Google Ventures, is a major holder, over 11%, and reportedly didn't change their stake recently. ARCH Venture Partners, a big name in early biotech VC, also holds over 11%. These are the early long-term backers, probably involved at the board level. But on the flip side, some other big institutions significantly cut their positions in Q1 25. ARK Investment Management, Goldman Sachs. Looks like some funds were trimming risk or getting out before or around that May restructuring news hit.
What about insiders, management, board members? Do they own much stock?
They do. Insider ownership is substantial, around 24%. Generally seen as a good thing, aligns their interests with shareholders. And there was some really interesting insider buying recently.
Oh, yeah. Tell me about that.
So in May 2025, right after all the bad news dropped, The restructuring, the layoffs. The CEO, changed the new CEO, Alan Ryan, went out and bought 125,000 shares on the open market. The chief technical officer and chief business officer also made smaller but still significant open market buys around then.
Wow. Okay, that's putting your money where your mouth is, right? A tangible vote of confidence from the new leadership in the plan they just put in place.
It really is. Sends a signal they believe they can turn things around, despite the market negativity. It stands out, especially compared to some insider selling that happened earlier in 2024 and late 2023, although sales can happen for lots of reasons.
With these big VC firms and significant insider holdings, is ownership pretty concentrated?
Yeah, it is quite concentrated, especially among those big institutions and the founding VCs like RSeach and Google Ventures. That means the actions of a relatively small group of large holders can have a bigger impact. Having those experienced VCs on the board probably means strong oversight, and you have to assume they were heavily involved in pushing for those strategic changes in May.
Okay, let's try to pull this all together. Thinking about risks, opportunities, like a SWOT analysis based on everything we've covered. What are the core strengths?
Number one is the prime editing technology itself, right? That potential for precision, versatility, avoiding the double-strand breaks, targeting maybe 90% of mutations. Then there's the scientific credibility tied to founders like Dr. Liu. And that initial human data from PM359, even though they're farming it out, it does validate the platform works in people, plus the newly focused pipeline and existing partnerships.
And the weaknesses. Where are they most vulnerable internally?
Money. It's the huge one. Financial constraints, the constant cash burn, that limited runway into H1 2026, needing more funding, the going concern language. It all points there. Also, the prioritized programs are still early. Data is years off. The recent restructuring itself signals pressure and could disrupt things. Heavy dependence on this one core technology succeeding, and that rising debt-to-equity ratio weakening the balance sheet.
Okay, what about external opportunities? What could go right for them?
Well, the diseases they're targeting, Wilson's, AATD, CF, have huge unmet needs, big market potential. The whole gene editing field is growing, which is a rising tide. The platform's versatility means they could potentially expand into many other diseases later on. Successfully partnering or licensing out programs like PM359 could bring in cash without selling more stock, and just general advances in delivery tech, like LNPs, could make their in vivo approach even better.
And the big threats lurking out there, what could really trip them up?
Competition is fierce. Lots of players, different tech, some further along, some targeting the exact same diseases. Clinical trials are inherently risky, high failure rates, and regulatory approval is a long, tough process. Financing risk is huge. Can they raise money again? And on what terms? Protecting their IP is critical. And there's one more specific threat mentioned in the source's potential U.S. tariffs in 2025.
Tariffs. How does that hit a biotech company?
Yeah, the idea is tariffs on imported stuff like key ingredients for making therapies, lab supplies, APIs could directly hike up their R&D costs, maybe manufacturing costs down the line. Sources mention a bio-survey showing U.S. biotechs rely heavily on imports. So tariffs could mean higher costs, maybe supply chain headaches, maybe even influencing where they run trials, just another layer of cost and complexity they don't really need right now.
Okay, let's synthesize. What's the core narrative for Prime Medicine at this moment?
Okay, so you've got this company, Prime Medicine, with potentially game-changing technology, prime editing. They've even got early human data showing it works scientifically.
Right.
But they're facing this brutal financial reality, burning cash fast, limited time before they need more, forcing a major, painful strategic shift layoffs, refocusing the pipeline on bigger market, maybe more scalable in vivo bets, and bringing in new leadership focused on survival and execution. And the market. Totally skeptical right now. Low stock price, high short interest, analyst downgrades. It's all pointing to investors focusing squarely on the financial risks and the massive execution challenges ahead, largely discounting the scientific promise for the time being.
So the path forward looks treacherous, highly dependent on hitting milestones and finding cash.
Extremely. Survival, let alone success, really boils down to, can they manage the burn, extend the runway, actually hit those key milestones for Wilson's and ATD in 2026 and 2027? Those recent insider buys offer a glimmer of internal hope, but the market's clearly saying prove it.
You know, from a classic investing standpoint, yeah, these sources flag this as super speculative, high risk, doesn't have the financials, the predictability, the strong balance sheet you'd normally look for in value investing.
But maybe for a certain type of risk-tolerant investor, possibly. For someone looking at deep values, special situations, maybe. There's that stark disconnect between the potential of the unique patented tech and the really depressed valuation. The potential for a turnaround under new leadership, focused on high-value targets. That's the bull case. But it comes wrapped in huge financial and execution risk. So the key things for you, the listener, to really watch going forward are progress and data from those Wilsons and ATD programs, especially that 2027 data point. How they manage the cash burn, and critically, can they raise more money on decent terms? Can they actually execute this new focus plan? Do they find a good deal for that PM 359 program? And of course, how do they stack up against all those competitors?
Yeah, it really comes back to that core tension we've seen over and over here, doesn't it? This incredible, potentially world-changing science slamming up against the harsh, unforgiving economics of drug development.
Absolutely. For Prime Medicine, the huge question isn't just if the science works, they've got early signs it does. The real question is, can they survive the financial valley of death? Can they execute this tough pivot, raise the cash they need, and stay afloat long enough for that science to finally deliver on its promise in a way the market actually values?
A massive amount riding on the next few years. Well, if you want to keep tracking companies navigating these kinds of high-stakes situations, remember, you can get more deep dives, request your own analyses, just subscribe to the Stock Analytics AI YouTube channel.
And just the standard reminder, this conversation is purely for informational and educational purposes. It is definitely not financial or investment advice. Investing in biotech, particularly clinical stage companies like Prime Medicine, is highly speculative. It carries significant risk. You could lose your entire investment.
Yeah, this deep dive is based on the sources we cited, but we don't guarantee their accuracy or completeness. Opinions can change.
And remember, this content is generated by AI based on that source material. Always do your own thorough research, your own due diligence, and please consult with a qualified financial advisor before making any investment decisions. Past performance is never a guarantee of future results.
Thank you for joining us on this deep dive.
Hope it provided some clarity on a complex situation.
We'll catch you on the next one.